Good morning, everybody. How y'all doing? How y'all doing? How y'all doing? And I don't know if it's the early morning Georgia weather or what, but got my throat sounding crazy. How exactly can your throat sound crazy? I was up early this morning. I was back here getting ready to try to put some lines on my chart, and then I noticed that today not only is it Jada Waiter's 24th birthday, I noticed that today was like the last blood moon or whatever they call it until 2025. And I happened to notice that I was up at the exact time where you could see it in Georgia. So I done went outside and I finally found it through the trees because it's a mid. We stayed down in a valley. I seen it through the trees. Neighbor dogs barking at me, you know what I'm saying? Them little killers over there. And I finally saw it. So I'm trying to record it with my phone. My phone ain't doing justice. So I ran in, grabbed one of my cameras, got one of my cameras, and I'm talking about it's moving fast. Like it's like 5 something in the morning. So it's moving fast. It's getting away from it. So I finally got a picture. I got a picture for the kids. I sent one to Jada. I sent it to our family group chat so the boys can see it. The boys in Calandra can see it. You know what I'm saying? I was trying to record it. I didn't have my glasses out there. So when I'm taking the picture, I can get the camera to focus. But when I'm trying to record, it's like I'm trying to focus it because they keep trying to focus on the tree close to me, the branch in my yard. And I'm trying to, and I ain't got my glasses on. So I'm like the video all going blurry. Blurry focus. They saw it though, man. It was an adventure this morning. That ain't why y'all tuned in. Good morning, everybody. Welcome. I'd like to welcome y'all to the overnight price action for November the 8th, 2022. Yeah. AKA my eldest daughter's birthday. 24 years old today. When I look back over time, I realize time flies. 24 years old today. The overnight price action for November 8th, 2020. This is your first time tuning in to Tim's Tidbit. I like to say, welcome. If it's not your first time tuning in, I still want to say welcome and thank you for pulling up every single day with me and Spidey. Y'all see Spidey back there. We in the library now. We ain't on the background no more. We hanging out in the library now. Me and Spidey chilling by the window over there by the one light bulb that working here. We got a blown light bulb over here. Got it. Where is it? Right there. Got to get maintenance to work on that. They won't. It'll be blown the whole time we in the library. You feel me? If this is first time tuning in and you don't know who I am, my name is Timothy Lee Rogers Sr. I get on Al Gore's internet every single day. Once at 9 a.m. Eastern Standard Time to talk about the overnight price action. Once at 6:30 p.m. Eastern Standard Time to talk about the price action recap. Did we get it right? Did we get it wrong? Did we learn something? Did we get in any trades? Are we preparing to get in any trades? Are we getting out of any trades? We just talk about the price action. I primarily swing trade the SPY and I dabble, if you will, with the ES futures. But I talk about the price action to help somebody get the aha moment. Help it unlocking somebody brain that, hey, I am seeing this right. Hey, this is what a full-time trader would do. A lot of people get on the internet and try to sell you stuff. I ain't selling you nothing. I'm just telling you how this dude from Fort Lauderdale, Florida, see it. If you see it the same way I see it, so be it. If you don't see it the same way I see it, so be it. Ain't no right or no wrong way to make money in this market. It's all about what makes sense to you and what worked for you. So go on and do what you do. Speaking of do what you do, please hit the like button. That's all I ask you to do. Wherever the like button is on your screen, if it's over here on this side of your screen, if it's over here on this side of your screen, wherever your like button is, press your like button because I ain't on no other social media. The only way other cousins gonna see this free information is if you hit the like button. And if you hit the like button, they can see the free information, they get information, they can implement the information, they can make some money. Thank you. Let's go see who in the chat, man. Who's in the chat this morning? Here to learn and share. Good morning to you. The birds are chirping. They out the window. Tweet, 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 tweet. Can you hear them? What's up, Father of Legends? Salute to you. Valdez. What's up, Valdez? Is Angela in the building? Buenos dias, Valdez. Ladies and gentlemen, we have District Attorney Angela Valdez in the building. Good morning, Angela. How are you? Mendez, what's good? Hello, Anna. Hello, Elsa. I have not seen you in a long time. Good morning to you too, Queen. What's up, Mendez? I ain't seen you in forever. What's up, Laverne? Cool it now. Hey, watch out. What's up, Cool it? What's going on, Otis? Yes, happy birthday, Jada. What's up, Kareem? Good morning, that person. What's up, Robson? Seawalk. What's up, Seawalk? I don't even understand how my Seawalk. What's up, Seawalk? Happy birthday to your daughter. Oh, sure, she. I appreciate the birthday wishes for the baby. Hold on, let me get. I got the screen recorded. Hope I didn't want anything in particular. Just checking on you. Oh, that's my dog. That's my dog. Y'all hold on real quick. Let me record these birthday wishes from Eric. I'm gonna record the birthday wishes from everybody except for Robinson. Who said happy birthday? Right there. Here to learn and share. Happy birthday, Jada. Who else? Let me see. Otis. Happy birthday, Jada. Oh, okay, I'll put him on there. This is the pain in my happy birthday to your daughter. I'm sure she takes after her mom. See this guy right here? That guy right there. What does he look like, Jada? You tell me. Don't he look like something off of a serial killer documentary? Coolin said, happy birthday. Happy birthday from Coolin. Rhonda Green. I appreciate that. Look at Rhonda Green got on a queen crown. You better make him eat cake, Rhonda. Happy birthday, Jada. Father of Legends. Happy birthday, Jada. Did I say cool it? Cool it now. Ooh, watch out. All right, man. I'm going to send this to my daughter. I appreciate y'all, man. Spider Gang saying happy birthday. Thomas said happy birthday, baby. Everybody said happy birthday to my baby. I'm about to end the video now. Y'all can stop typing happy birthday. Get off my screen, Thomas. All right. Yeah, man. Y'all know how gang know how I do. If this your first time pulling up and you don't know what's going on and you ready to hit that dislike button, do what you do. Because guess what? Now them the books. There it is over there. Appreciate that, Mendez. Appreciate that. There it is over there. It's right there. That's the window. That's the window. That's the door. Pick your poison. I appreciate that, Seawalk. I appreciate that. Pick your poison. Which one? Jada. Let me see, Jada. Y'all hold on. We finna get to it right now, y'all. Let me send this to my baby. All right. Okay. Now that we done got to it, I hit my boy back in a minute. Let's appreciate that, Laverne. I appreciate that, Laverne. Thank you. Let's get to it, man. What I want to do today, we're gonna talk about the overnight price action. This week, I don't know what this week is gonna hold. This is my first time like going through a midterm election where I know how to read the price action. So I don't know what to expect. So I'm just kind of playing this whole week by ear. We got the election today. Election results gonna be tomorrow, meaning like during like market time. And then CPI is on Thursday. You know what I'm saying? So it's like, it's a lot going on right now. So I'm real cautious right now. Michelle Tucker, what's going on? Cindy. Have I ever seen that name before? Have I seen Cindy before? Cindy, if this is not your first time pulling up, I truly jollipize. But that's my first time ever seeing that name. So, welcome. What's going on, Michelle Tucker? How you doing today, Michelle? I seen somebody in the Discord said, thank you, Michelle Tucker, in my Tim voice. And you know, as soon as I read that, I said, thank you, Michelle Tucker. Anyway, like I was saying, this week, I'm kind of playing this week by ear because this is my first time going through a midterm election cycle. I've been told, and I've researched, and I've been told by my financial advisor that midterms are typically bullish times of the year. And thus far, that's been playing out because the market has been in a buy program for like, you know what I'm saying, over the last 20 to 30 days, over the last probably month or so, 15 to 20 days, it's been in a buy program. True, we did pull back last week a little bit, but we've seemed to continue that buy program. But anyway, I appreciate that, Angela. Oh, my sweetie done pulled up. What's happening, baby? Hey there. How you doing? You finished voting already? What was I saying? I see that pretty lady there and I get thrown off. She's still, you give me butterflies. Hey, yeah, it's been like bullish. Anyway, get focused, Tim. Since we got Al Gore's internet up, let's go over here and see what Spylene talking about. Y'all know who it is. Y'all, we wrote a song about it. We sing it every day. If you ain't heard the song, want to hear it, go. Spylene, where you at, baby? Here I go. Hey, how you doing? I'm glad that you came through. Spylene looking like, hey, Spylene about to gap up. Man, maybe I shouldn't have got out them calls I got on Thursday. The Risky Roger calls. Maybe I shouldn't have got out. See, that's that. Let me see. See right there? Y'all know what that was right there? Can somebody put in the chat what that was just now? What just happened to me just now? Can somebody put it in the chat? Right? Come on. I'm gonna sing the Jeopardy theme music while I'm waiting on y'all to put it in the chat. What happened to me just now? Greed. Look at here to learn and share. Look at here to learn and share with the greed. That was greed. Do not fall victim to the green-eyed monster. Discipline. My wife said discipline over dollars. FOMO. I'm glad Will put this on here. The difference between FOMO and greed, right? FOMO is trying to, let me put the screen back up. I'm glad Will put this up here because a lot of times we use terms interchangeably that we shouldn't use interchangeably when it comes to trading. FOMO would have been yesterday when I was talking about I didn't get my opportunity to get in on, like, this was the Risky Roger entry. We talked about the Risky Roger entry, the confirmation entry, right? The Risky Roger entry, I closed it because we pushed up. When it came down for the confirmation time, it didn't give me the entry. FOMO would have been me going in yesterday, trying to get in on this pullback when I initially planned on getting in on this pullback. That would have been FOMO because I would have been chasing the move that I should have taken, that I was supposed to take here, but I was chasing it up here, right? In hindsight, seeing it, the chase would have worked out. But the worst thing that can happen to you is you do something, you break a rule, you give into FOMO, and it worked for you. If you give into FOMO and it worked, it starts to instill bad habits. You break a rule and it worked, it starts to reinforce bad habits. So that's the difference between FOMO and greed. It was greed because I actually got in here, got out up here, and now that I see it here, I'm saying, man, I should have stayed in. That's the oh man, I wish I could have caught this one on the video. Valdez, you supposed to put the Feliz Cumpleaños on there. You know I hablo. You didn't know I hablo. You were supposed to put the Feliz Cumpleaños on there when I had the video up. Golly. But anyway, that's the difference. That's the difference. That was a good one though. FOMO. The FOMO. Because FOMO now, the FOMO like now it's for the people who didn't take advantage of the Risky Roger, didn't take advantage of the confirmation entry, right? Saw it work this day, and now this day they like, man, I got to get in on this. Now it's some people suffering FOMO right now. Man, Tim said this last week on Tuesday that the market was gonna do this exact same thing. I ain't believe it. I'm gonna get in on this, man, because we think it's gonna go uphill, so I'm gonna get in right now. They get in and pull back, bust them in the head a little bit. They get scared, get out, and pang out and take off and go where they thought it was going to go. That's FOMO. Do not give in to FOMO. Do not give in to greed. Stick to the script. Stick to the plan above all else. Y'all say hey to Spyleen. Let's look at overnight price action real quick, and then I want to talk about getting in sync with the algo again today. Price action in a nutshell real quick. Yesterday we closed 1600 candle. We closed at 38.16 even. 1700 we pulled back a little bit. When the Sydney / Asian or whatever you want to call it, I think it's the Sydney. Sydney opened first, then Asian opened second, I think, right? So we opened up, took out yesterday's high immediately, went straight to it. Pang out, took it out, came back down, right? And then we just went all the way, went from that high all the way down to the overnight low in London. Just came all the way down. We came up. If y'all remember, we had marked out a daily breaker. We came up into that daily breaker, right? We pulled back down into a 4-hour fair value gap, right? If y'all don't remember it, did I mark it out? I don't think I marked it out yesterday. Did I mark it out yesterday? I don't know. Just in case I didn't mark it out yesterday, I think I got it on my other chart still. I think I got it on my other. Yes, I do. I got it on my other chart still, right? This right here is the breaker. Boom. The breaker that we had. This right here is the 4-hour fair value gap. Boom. 4-hour fair value gap. And then the 4-hour order block that's still there. We didn't touch, right? We came down. Boom. Closed the 4-hour fair value gap. We came up to the daily breaker. Remember yesterday? We came up, we'll talk about, we're going to see if we're going to hit this breaker. We came up, we hit the breaker. I can't see y'all. Let me put y'all back up. We came up, we hit the daily breaker, right? In the premium. We're going to talk about it. But Tim, that's the premium alarm up there. Glad you said that, little Tim Rogers. We're going to tell you how to get in sync with the algos in a minute. That's the equilibrium for the overall range we're looking at, right? So we came up to a premium PDA, a daily breaker. Came back down overnight to a 4-hour discount PDA, a 4-hour fair value gap. Pang out! Bounced off it, gone. Took out the buy side liquidity again, right? So we went to a daily premium to a 4-hour discount, reacted, premium discount. And this, what I learned from ICT, whatever you hit in the premium, and then you're coming back down, you look to deliver in a discount to one level lower, and vice versa. Whatever, like if you're reacting off of the discount, and when you go to the premium, you looking to deliver in the premium to one level lower. So we went to a daily PDA in the premium to a 4-hour PDA in a discount, right? So moving them out the way again. Get out of here. Get out of here. You're no longer active, right? And then we dilly-dally right here. We're going to check to see if this is around equilibrium. Remember, right above New York open, you see how we consolidating right there? Like you get 1, 2, 3 candles in the same spot. That's going to be some consolidation on the lower levels, right? Like 15-minute, probably consolidating real good up in that area. Remember, we're going to check to see if that's equilibrium right there. That's one way you can start to see if you're in sync with the algos. Is like wherever the market be consolidating, you know what I'm saying, 9 times out of 10, it's going to be consolidating at an equilibrium for something, right? So, and then now we've taken out buy side again. So we took buy side during the Asian, the Sydney/Asian. Yeah, the Asian was already open there because that's after 8 o'clock right there. So that's, yeah, between 8 and 9 o'clock. So we took out the buy side, came down to the discount, pushed up, took out buy side at 6 o'clock again. And then we just took out buy side again on this, just after 9 o'clock. On this 10 o'clock calendar here, just after 9 o'clock, we took out buy side again because it's 9:21 and we've already taken buy side. So right after 9 o'clock. So we've taken buy side 1, 2, 3 times since yesterday's close. And the discount PDAs, and the down close counters are still holding up. So it still seems like the market is still in the buy program. Will the buy program continue? I don't know, Raggy. I'm just trading what I see. But yeah, that's the overnight price action in a nutshell. We the midnight open is at 38.1275. The London open is at 38.0775. Okay, now let's go over here to Trading View and let's talk about getting in sync with the algos. Right now, we all know that I'm primarily a swing trader. So when I look at the price, I look at price from a zoomed out view, looking at the overall move, trying to get in touch with like shout out ICT, how you say the institutional order flow, right? So right now, we're about to go to class. We're about to make it interactive. I ain't gonna say go to class. We're gonna make it interactive. So can somebody who understand the ICT stuff, or even if you don't understand the ICT stuff, right? Can somebody tell me what we haven't been saying this, the institutional order flow, but can somebody tell me what the institutional order flow currently is based off what we've been seeing, right? The broader institutional order flow. What is the institutional order flow at this current time, right? What's the institutional order flow? Can somebody put it in the chat? What do you think it is based off what ICT be teaching? What is the made it to what's happening, Super Sly Fox? Yes, you made it. What is the institutional order flow? Right? Uptrend. There you go. Bullish. Kareem, you hit it. Bullish. The institutional order flow is bullish. Look at here to learn and share. Bullish/buy model. Look, y'all all over it this morning. Kareem came and Kareem the Dream pulled up with it first. Uptrend. Uptrend is the same thing as bullish. In my mind, I know what you mean, my guy. Bullish/buy model. Here to learn and share with the note taking. So for those that get off my screen, Kareem, for those who don't understand what we're talking about, from ICT's teaching, the way he identifies the institutional order flow, meaning what are they doing? Are they buying or are they selling? One way to identify it is to look over your IPDA data range, right? Remember, we're talking about the IPDA data range, right? Let's get this other stuff off the screen. Get off my screen. Come up with the IPDA data range, right? So anybody who don't know what the IPDA data range is, the look back, should I say, the look back, you got the like the bottom horizontal lines are the 20-day look back, 20-day look forward. The middle is the 40-day look back, 40-day look forward, and the top is the 60-day look back, 60-day look forward, right? So looking at your IPDA data range, your IPDA data look back, right? So if you look back all the way to 60 days back, you can see that the market was in a sale program, right? How do you know it was in a sale program? How do you know the institutional order flow was bearish? Because looking at, right, it's coming down, and you look at the green up close days and the PDAs, the premium PDAs, the ones above price, they're being respected, right? We're coming down, we're taking out sell side. That's a PDA. We take out the sell side, we come back up into into this fair value gap, into this liquidity void, it close to that gap down, but we got a liquidity void right here. We push up into this liquidity void, we push up into this fair value gap, and we sell off. It's respecting the premium. We got an up close candle here, right? We come down, we take out some more sell side, we push back up into this fair value gap into this order block, and we sell off. We're respecting this up close candle. We're respecting this order block, right? We sell off. We come down. We come back up into this, come very close to this fair value gap here. We got this liquidity void right here. We come into this liquidity. We got a 1, 2, 3, 4, 5, 6, like a 6-day liquidity void right there. We push up into it pretty much to the mean threshold of this liquidity void right there, and then we sell off. We're respecting the premium PDAs and continuously pushing down. We're respecting the green up close candles. We're trading up into green candles and selling off. You know what I'm saying? So the market's in a sell model in the last 20 days, right? And from where it is lined up now, in the last 20 days from where it's lined up now, you can see the market has started going into a buy model, right? Let's move it over to today. Boom. Right, you can see the market has started going into a buy model, right? We was in a market make a sell model, and then we started going into a buy model, right? How can you tell we started going into a buy model? Because we started respecting the down close candles. We came up, had a break in market structure here, pulled back down 50% of this order block and blast off, right? Had a break in market structure there, aka taking out buy side liquidity, right? Pulled back down, came into where these down close candles, this bullish order block, pushed back up again, had another break in market structure there. We pulled back. Where do we come back to? Right back down to this bullish order block again, respecting this down close candle, pushed up for the next 3 days. Now here we are again. We just hit another we hit a breaker. We said we hit a breaker, right? We hit a breaker over here. We hit what else did we hit? We hit the breaker, right? Because this was the breaker over here. We went up, took out. Actually, this is the breaker right here. This big candle on the SPY. I mean, on the ES, this big candle right here, that would be the breaker right there, a daily breaker right there, because we went up, came down, boom, hit it right there. So we hit a breaker, we hit a fair value gap now, but we're respecting these lows. So now you know what I'm saying, we're still in this buy model. Right, we're still in this buy model. Institutional order flow is still bullish, right? So, and that's you, and then you can use the IPTA, right, to get in sync with the algos. Now that's how we know that we're in the buy model. That's how we know that we bullish. Now we can use the IPTA look back to help us get in sync with the algos. What, Tim? How you gonna do that? I'm glad you asked that question, little Timmy Rogers, because you want to start like we got the 20-day look back, the 40-day look back, the 60-day look back, right? So this say you coming in right now, you ain't got nothing marked on your chart, just like we don't right here. All we got is the look back, right? So you be like, okay, boom, let me look for the lowest low and the highest high in the past 20 days, right? This is the lowest low and this is the highest high right there in the past 20 days, right? So boom, equilibrium for that right there is right there, right? Look where we came down to on this last retracement back from, what was this? Last Monday, the 31st. Yes, last week. So last week, Monday, Tuesday, Wednesday, Thursday, Friday. This was last week. Last week when we pulled back, look where we pulled back to, right to equilibrium of the last 20 days, from the lowest low to the highest high of the last 20 days of the look back. We pulled back to equilibrium of the last 20-day dealing range, right? Pull back to equilibrium. When we got to equilibrium, what do we hit? We hit a PDA right at equilibrium, poked a little bit into a discount, and then took off. You see what I'm saying? We came down. So this how you can use the look back to get in sync with the algos, right? If you just pop up right here, you ain't got nothing on your chart. You ain't got nothing that we've been looking at. You know what I'm saying? Now, what we was looking at last week, right? Let's open up our box was made. Our box was made last week, right? Our box was made last week, right? Was it last week or was it week? When we made this box a while ago? I can't remember. But if we push it back, let's just push this back right here, right? If we come back here like this when we made our what's the name? If we come back to that right there, that low there, going from there to there, when we picked out our lows and our highs, that was the lowest low, that was the highest high, right? And if you push it up to our lowest low and highest high when we did it, that's why our equilibrium is right there. And then that was our equilibrium for the time when we made this box. You know what I'm saying? When we made this box, the top and the bottom, that was our equilibrium. And I haven't moved that box because why? We haven't on a larger time frame for my swing trading. We haven't made a new low or a new high. That's why I haven't adjusted the size of this box, because we're still in that dealing range. So what I do, I just go back and get in sync with the algos inside my dealing range, because these are the highs and the lows that I'm watching. You see what I'm saying? And if you look, we are still in the middle of the road. We right back there in the middle of the road, right there. We kissed the middle of the road this morning, right? Turn that back off. Okay, so back to what I was talking about. So now, boom. Let's just I'm gonna stick a line here. Let me turn this off. 37, 13, 25, right? That's gonna be the equilibrium. That's the equilibrium for the 20-day look back, right? That's equilibrium for the 20-day look back. Equilibrium, range equilibrium. Boom. Right. 20-day look back. I just put LB. 20-day look back. Okay, boom. So now we see the short-term equilibrium. We ain't got nothing on our calendar. We ain't got no PDAs. We don't know nothing. We just popped in today. What my IP there? Did I turn my IP dog? Oh no, I just moved it. Come back over here, IP. What you moving for? Boom. All right, so there you go. Now we found our equilibrium for the 20-day look back, like the shortest time frame in the IP to look back. What, Tim? Why you didn't go all the way back to 40 or 60? I'm glad you asked that question, little Timmy Rogers, because right now I'm just calibrating it for the short term. If you want to calibrate it for farther out, feel free to go as far back in the IP to look back as you want. But I'm just talking about the short term because we at the beginning of the week, we just had a retracement, right? We've been bullish and we're just having a retracement, and now we're seeing the bullishness continue, right? Which we was bullish, retraced back, hit a discount PDA or a PDA right at equilibrium, because whenever you take out buy side, you can always look for it to come back to at least equilibrium, more hopefully into a discount. You know what I'm saying? That's how it is. Whenever you take out buy side, you want to see it come back to at least equilibrium and hopefully give you a deep discount, right? So we took our buy side, excuse me, over here, took our buy side, then we came down to where equilibrium and we reacted up. So that's why I'm only looking back 20 days, because over the past 20-day look back, we've came up, made a new high, right? Pulled back to equilibrium in that 20-day look back and starting to push back up now, right? if we were still melting down here, if we just continue to melt down, then I would go back to calibrate it to the 40-day right there. I would go back to calibrate it to the 40-day right there, like that. See what I'm saying? I would go there, and because if we were still melting down here and not showing any sign to want to go up, then I would go back to the 40-day, you know what I'm saying, to see, okay, is it coming back down and giving me a deeper discount off of this 40-day before going up, or is this it and we finna go make new lows? You know what I'm saying? But since we stopped here at the equilibrium and started pushing back up at the equilibrium for the 20-day, we stopped at equilibrium and started pushing back up. That's why, you know what I'm saying, I went back. And then I didn't know that was equilibrium, but since we saw a reaction, that right there was like, okay, it's reacting off something here. Let's see what's up with the last 20 days. Let's see, you know what I'm saying? Blah, blah, blah. Y'all get it. Y'all get it. Okay, now, once you find out that's this right here is our overall range, right? This is our overall range. This the top and the bottom. The 20-day is our overall range, the top and the bottom, right? So let's make some lines for the top and the bottom. Boom. This is our overall top and bottom. That's the top. Box top. We're gonna say box top monthly because that's our top, right? And then this is our bottom. Where did it go? Where did that line go? Box top, monthly, box top, bottom. Boom. So that's our overall box, right? That's our overall box. And then this is the equilibrium for the 20-day look back. Now, whenever you have like we got this price leg going up, and inside the overall box, we got another price leg going down. What I like to do is I like to find the equilibrium, get over there line. What I like to do, I like to find the equilibrium of the price leg coming the opposite way, because since we just bounced off this and went up, right? We've broke, you know what I'm saying? We broke the sell side, we ran sell side, and we bounced up. So now we've changed directions. So now this is our overall here. So we got a price leg here, we got a price leg here, and now we're starting a price leg over here. So since we're starting this price leg up over here like this right here, I want to find equilibrium of this price leg right there, right? Boom. So boom, come in there. Equilibrium for that price leg right there is at that 38.16, 25. Coordinates, Tim. 38.16, 25, right? Let's say let me put a different color. I call it equilibrium premium. Hey, you know what? That's really close to the premium. That's close to equilibrium of the premium. Like if you broke this down into quadrants, equilibrium of the premium. If I broke it into quadrants, right, like go from equilibrium up to the top. See right there, it's only a stone's throw away from the equilibrium of the premium. But I was just getting the equilibrium of this price leg. In this case, it happens to work out to be, because this price leg came down to equilibrium, that the equilibrium of the premium is just working out to be like pretty much in the same spot, right? And then if you want to like really if you really want to drill down to like really try to get a day trade, you know what I'm saying? You can come over here to this piece of the price leg and find out where the equilibrium is there to see when it goes into a discounted premium on this piece of the price leg right there, right? If you really want to break it down and start looking for a day trade, right? Now you got your top line for your quadrant right here, because it worked out that this price leg stopped at equilibrium. You could have another quadrant down here where it'd be like equilibrium of the discount. But since we're going up, we're not going to focus on this part down here. Since the market is moving up, we just focusing on the direction. We just going to trade what we see, and we're following the institutional order flow, because during the institutional order flow for your swings, you want to be looking for reasons to, since we're in a buy program and the institutional order flow is bullish right now, we want to be looking for reasons to buy until the market give us reasons to sell on the swing on the overall time frame. And now right here we see that we've come down to a equilibrium, pushed up, right? And now we've moved back on this 20-day look back. We're now currently at equilibrium and a slight premium right here inside this we're inside this daily fair value gap. We're inside this we had this this order block right here that we just bumped into. We just bumped right there into this we had an order block on, we took off from it. It was on the sell side. So now when, you know what I'm saying, when we come to the other side, we expect to bounce off of it. When we get to that area and we came up, boom, we bounced off of it. You know what I'm saying? It was right there inside this breaker. This order block was right there inside this breaker. We got a lot going on in this area right here. Boom, we hit it. We reacted off of it. You know what I'm saying? We reacted off of it. So I ain't talking about the PDAs right now. I was just talking about how to get in sync with the algos and to see what the algos are doing when you just drop in and you ain't got no clue as to where the market is right now. You ain't got no clue as to if we're in a discount or if we're in a premium. But you know what I'm saying, we use the IPTA look back for the last 20 days. You know what I'm saying? Get in sync with, okay, boom, are we in a discount or a premium over them last 20 days? We just hit equilibrium, start pushing back up into a premium. Then we look at we looked at this price leg here, because in this case we happen to pull back and bounce off the equilibrium, right? Now we see, boom, we've come back to equilibrium of this price leg, right? We've come back to equilibrium of this price leg. Boom, we just hit it. We at equilibrium of that price leg. And then if y'all notice, that coincides with what we had already looked at, like way back. We just came up to equilibrium on our big look back from when we look back from way back. You know what I'm saying? From way back. You know, right now that would be back in the 40-day look back. You know what I'm saying? That would be in the 40-day look back right now, because that's our box top, and that's the 40-day look back zone. You see what I'm saying? So it all, you know what I'm saying? It all adds up. The computer's doing all the trading, so the computer's gonna compute. You feel me? I just want to share that. Oh, the market been open for a while. I'm sorry for anybody that need to go trade. Y'all going to do that. Please hit the like button on the way out the door. But I just want to share that. Hopefully that helps somebody on how to figure out how to get in sync with the algos, how to use the IPTA. I thought about it. I thought about it this morning when I was in here, because the homie Father of Legends was asking about how I set up the IPTA look back, and they had questions about how to move it all together. You know what I'm saying? Like on TradingView, when you come in there and if you put it in a folder, you can grab all the drawings and move them around all together. If they be consolidated, I mean, if they be put in a folder together, you can just move them all around together. You know what I'm saying? Same thing with anything. Like if we look at the TDA, like all these drawings from when we drew the TDA, you just select the folder. Everything is highlighted. When you grab something, you can move it all around together. Move the whole thing around together. So that's all I got, man. That's all I got. Hopefully that was helpful to somebody. Let's go see what the market doing right now. We came back down to this hourly fair value gap that we had made. We had just took out the buy side, like we said, and we came back down to this hourly fair value gap that we made between 4 o'clock and 7 o'clock this morning, just below we went just below the midnight open. That's also order block. That's a bullish order block right here. We got a bullish order block and an hourly fair value gap, right? I would say I'm leaning more toward the fair value gap because the market moved back to fair value. It could very well be moving back to the order block, but it's confluence of stacked discount PDAs. So to be honest, I really don't care which one it's going to because it's an hourly fair value gap and an hourly bullish order block. So it really don't matter. It'd be nice to see if this hold up, if this order block does its job and push us back up higher toward the broader range equilibrium. Let's see how that play out. We've been this is yesterday's close. We went up, took buy side, came down for our fair value gap, went up, took buy side, consolidated there, came down. That's what we were supposed to have been looking at, that consolidation above that consolidation above that line. Easy. So that's what, the 13th. So for the 13th to there, okay, equilibrium on that is there. And from that price leg to there, yep, boom. Equilibrium of this price leg. That's where the consolidation was this morning. From the high from that October 28th high to the November 3rd low. That's where we was consolidating at this morning when I was talking about that consolidation right over there. Cause see, that's right above that what's the name? Let's see if that's the same place. Yep, because this is yesterday's close. Yep, because we closed yesterday right there. Right, we closed yesterday right there. Equilibrium for that price leg is right there, pretty much at yesterday's close. And then this was yesterday's close here, and that's where we was consolidating right there. So boom, we was at equilibrium of that price leg coming down. At the price leg coming down, what was that? The 28th? What did we say that was? The 28th? That's the 28th. Yeah, we went from the 28th down to there. Boom, right there, equilibrium right there. Oh, let's get on that high. It's another high above that high right there. So boom, right there. Yep. And that's what we was consolidating at, right at equilibrium. That's why I said before that, like, whenever you see price just starting to like kind of consolidate, right, and see how we was like, we went up and down, but we was in the same range like pretty much the whole time. But you can really see it consolidating here. You can really see it consolidating there, right? So pretty much all of this right here is just like in the same range. And if you look, it's right there at equilibrium for that down price leg right there. That's how a lot of times you can figure out, hey, this is the equal. Like if you can't like really pinpoint which high low you should be using, if just put it on the lowest low and then just start moving the fib up until that 50% get to an area where it just keep consolidating, then you 9 times out of 10 you're gonna lock into what the algo is doing at that moment in time. It may not be the broader range, it may not be, you know what I'm saying, it may just only be for an hour, may only be for a day, but you will zero in on what the algorithm's doing at that time because they like to consolidate at equilibrium. Right, that's just a little cheat code that I figured out for myself a long time ago. I ain't gonna say a long time ago, but the cheat code I figured out for myself when I was trying to get in sync with the algos one day. That's it. That's all I got, man. Do anybody got anything before I call it? We've been on here for 49 minutes. Do anybody got anything? Was that helpful for anybody? Appreciate that. Here to learn and share. Was that helpful for anybody? We're getting a reaction off of that hourly fair value gap. We're getting a reaction off of there. Like I say, man, this is I ain't never trade during these times of like, You know what I'm saying? Election day, post-election day. You know what I'm saying? So I might just stay out of the market until after CPI on Thursday. You know what I'm saying? Because I've never actually been in. Like I say, it's easy to play Monday morning quarterback and go back in time and look at the candles during election times and be like, oh, the market did this, the market did that. But if you're not in the market when them candles are being made, it's sometimes it be a different story. Just like we'll talk about, excuse me, just like we'll talk about yesterday, right? We'll talk about yesterday where we was looking at the spaghetti. We was looking at Spalene, and was talking about how looking at the candles, it looked like it did exactly what I said it was gonna do. But if you was in this day right here, this day was a monster. If y'all remember, right, we gapped all the way up here, right? When we opened up, we gapped all the way up here and we took off going up, right? We gapped all the way up and took off. Made this daily fair value gap because we stopped right there, turned around and fell all the way back down, way below where we closed on that Thursday, right? And then we turned around and went all the way back up, way above the high of Thursday, and closed almost where we opened up. This was a crazy day. You know what I'm saying? This was a crazy day. But if anybody would just come in and look at this, if you wasn't involved in that day, you don't know that we gapped. You know we gapped up, but you don't know that we ran up, came all the way down, and then came all the way back up. You know what I'm saying? Pretty much. I think it was around like after lunch. Was it like after lunch at 2:00 when we took off and reversed everything in the day? Right? If you wasn't in that day, you wouldn't have known that I didn't get my entry that I wanted on here. It looked like it did exactly what I said I wanted it to do. And it did. It did what I said I wanted to do, but it didn't give me no entry. It didn't give me no entry. So it's like playing Monday morning quarterback. It's easy to go back in time and look when we had a CPI, or look when we had an election, or look when we had GDP, or look when we had FOMC, and play Monday morning quarterback and be like, yeah, the market did this. It's real easy to trade this time. You know what I'm saying? All you got is wait for the market to do that. Really? Where's your entry? You know what I'm saying? I'm man enough to admit and go into the calendar and show you I didn't get an entry. It did what I thought it was going to do, but I didn't get an entry. I'm not going to sit there and lead people to think, oh, yeah, you see, it did exactly what I said it would do. If you would have been there, you could have got. No, I ain't going to say you couldn't. I couldn't, because it ain't give me my entry. So I couldn't have got nothing. It did exactly what I expected it to do, and I couldn't have got nothing because it ain't give me no entry. It ain't give me my setup. You know what I'm saying? Shout out the homie that put the FOMO in there. What the homie name was? What the cousin name was that said the FOMO earlier? That's Michelle Tucker. That's the happy birthdays. I know I ain't tripping. I know somebody put, there you go, Will Copeland. Will Copeland put the FOMO in there. You know what I'm saying? The only way I would have got in on this move when it did exactly what I said it would have been to give in to FOMO, because it didn't give me my entry. The only way I could have got in was to give in to FOMO, right? And what would have been worse than me just sitting on the sideline because I didn't get my entry would have been to give it to FOMO, and then it actually worked out. Because it actually did what I thought it was going to do. But if I would have gave into FOMO and it worked out, guess what happened the next time and it don't give me my entry? I'm going to be enticed to give into FOMO again. But what if it don't work out that time? What if I'm wrong that time? You see what I'm saying? My soapbox is put up now. I appreciate that. I appreciate you. You're welcome. What you said? I will be rewatching yesterday's and today's video on Look Back. Regina. You remind me of a West Side Story. I appreciate that. Here to learn and share. Here to learn and share, always popping up with the notes. Hey, that's all I got, y'all. If y'all ain't got nothing, we gonna call it. If y'all ain't got nothing, we gonna call it. I appreciate y'all for tapping in. Like I say, I'm just kind of watching the market. I'm just, you know what I'm saying? I'm just kind of watching the market until after CPI on Thursday. Because like I say, today is election day. Tomorrow is after election. I don't know how the market gonna react during these times. I don't like, you know what I'm saying? I don't know how the market gonna react if I've been told based off the data and statistics that Dustin shared with me, when it's like a split, when it's like when like the Democrats are in control, or when the Republicans are in control, or if it's a split, the market tends to like the split, if I ain't mistaken. I'm gonna go back and check with Dustin on that, but I believe if it's split, the market likes it more if it's split than if it's one in control or not. I can't remember, but you know what I'm saying? All that kind of stuff there. I don't know how the market gonna react the day of. In the moment, I'm just gonna watch it, see what it do. It might trade super technical. It might just be super, cause looking at this candle that Spalene making right now, it looked like it's trying to trade super technical. And right now it is trading technical. Like again, we came down to that fair value gap, like I was saying before. We came down to that fair value gap and we got a reaction off of it. So right now it's basically trading super technical. It's not moving very, very fast. It's moving very slow. You know what I'm saying? It don't even seem like it's a New York Open. This really is moving like super slow. It's moving kind of like the London. It ain't moving as slow as the Asian, but it's moving kind of like the London. You know, y'all know the New York, when it be like volatile, it be them candles be moving. It be moving, but you know what I'm saying? It ain't like super wild, but it's trading really technical. You know what I'm saying? We ran this buy side, came down, and we stopped at this discount hourly fair value gap and pushed back up. So that what it is. That what it is. That's all I got. Just scalp 10. Just scalp 10 off that fair value gap while you was running your mouth. Get off my screen. I'm with Regina. Got a ton of your videos that I need to rewatch. Trying to learn this. Thank you. You're welcome. You're welcome. Hey, and speaking of trying to learn this, I want to try by this weekend to have the did I freeze? Okay. I think when I be clicking on stuff over here, it be acting crazy. Okay, so just want to share this with y'all real quick, right? So what I'm doing, what I'm gonna do with the series, I want to try to have it out. By this weekend. I want to try to have the lingo videos live, right? So basically, I'm breaking it down real simple. Can y'all see my screen? Yes, you can. So basically, I'm breaking it down real simple, where y'all already know I'm going through, like, from the first one that I shared with y'all. Well, let's go back for anybody who wasn't here for that. All right. So for anybody who wasn't here for that, right? What we going golly, why I gotta open up to the whole screen? Okay, so for anybody who wasn't here for what I was talking about, right? I'm going to be making videos for the different PDAs that I'm be making videos for. Can y'all can see my arrow? Regina, what you stick? You wanna get off my screen? Oh, that's here to learn and share. I'm sorry, Regina. Here to learn and share. Get off my screen. Hey, but these the so this the lingo that I'm gonna be breaking down, right? I had a and so it's gonna be video for mitigation blocks, video for breakers, video for liquidity voids, video for fair value gaps, video for order blocks, video for rejection blocks. Then the swing highs and swing lows, I'm probably put them all both in one video. I don't think they separate videos for those. Maybe they do, but I'm just gonna put them together. And then so the way I'm doing it, right? So let me see. Can I go straight to that? So boom, like the mitigation blocks. And the way I'm doing it, right? I'm just going, I'm keeping it real simple. They're gonna be short and sweet videos where I got the screenshot from ICT, right? I got the screenshot from ICT, and I got like the simple the definition of what he say it is. A real simple definition of what he say it is with his little drawing on there. You know what I'm saying? What he say it is. Keep it real simple, right? Boom. And why did I move that down? I should have kept that up. Where did it? Oh, there we go. Okay. All right. So boom. And once I give you his definition, you know, talk about his definition, boom, right? This the screenshot with his actual, well, no, that's just telling what it is. This is the screenshot with his actual definition from his video. Boom. He telling you what it is, you know what I'm saying, straight from his video, right? And then this is the way I interpret it in my head. You know what I'm saying? So it's gonna be, you know what I'm saying, what we talking about with a little screenshot from him, right? His definition of it, right? And then my interpretation of it, right? And then show you it in price action. Now, it's gonna be up to you to do the reverse. I ain't showing both. If you can't figure out how to reverse it, feel free to go back and look through ICT videos and figure out how to reverse it, but it's just the reverse. You know what I'm saying? So I think for the mitigation block, I think I did it for like selling. And then I think for the breaker, I did it for buying, if I'm not mistaken. Let me see. Breakers. So yeah, I did it for buying. This is hit like that's his definition of whatever it is, and then this is my interpretation of it, right? And then show you how to find it in the price action, right? How to find it in the price action. But you know what I'm saying? So I'm trying to keep it short, concise, to the point, and just talking about just that one thing. Just talk about that one thing, what it is, my interpretation of it, how to find it in price, right? And everybody already know the difference between the breaker and the mitigation block is that the breaker breaks the previous high or low, right? The breaker breaks like this, broke this low, right? If this didn't break that low, then this would just be a mitigation block. You see what I'm saying? Since we came up, this high broke this low, that made this a breaker, right? If this high did not break that low, then that would make this a mitigation block once we trade back up through it. You know what I'm saying? For everybody who went short on this leg, because this right here would be the mitigation area. This would be the mitigation block, and this would be the entry for the mitigation block. Because anybody that went short and it reversed on them and didn't break this low, now they're stuck short because they traded back through, and now they're stuck short and they're trying to mitigate their losses. And over here on the breaker, right, we broke this low, right? So you had people playing the breakout. You see what I'm saying? They was playing the breakout. So when he broke this low, the people that was playing the breakout, getting short, now they're stuck because it reversed. And then when it come back down, they're trying to mitigate their loss. You see what I'm saying? Because they went short down here under this low. And now that they've, you know what I'm saying, come back up, this area right here, they're trying to mitigate their loss. I got to mitigate my loss. That's the difference between the breaker and the mitigation block. The breaker catching the people playing the breakout, and then the mitigation block catching the people that was playing the reverse and then got trapped. But anyway, I just want to share that with y'all. That's pretty much how I'm going to be breaking it down, and it's going to be so you ain't got to go through and try to look at these hour-long lives. You can say, okay, I just want to learn mitigation blocks, or I just want to learn breakers. So you go over there, learn what a breaker is, and then you go to the price action videos and look at how to find breakers and price action, right? It's going to be a separate video from just looking at it like this right here. It's going to be a total separate video on reading the price action, looking for it. And then you go to the strategies and be like, okay, this is a type of strategy that you can use with the breakers. And then that way you ain't got to worry about going through looking at a million lives trying to look for the gems. I just want to learn this one thing. This is what I want to trade. Or you be like, okay, I want to learn all of them. So you can go through and look at all of them, and it'll be broke down in easy bite-sized chunks like that. Just want to share that with y'all. Hurry up and release. I appreciate you, Robinson. You are good for something. Double time private. You don't know nothing about no double time cooling. You ain't nothing but a chairborne ranger. Chair assault. Hey, man, I appreciate y'all. I'll see y'all tonight at 6:30. I'm gonna go out here and hang out with my sweetie. She took the day off because she missed me so much. She just wanted to be around me all day long. So I'm gonna go hang out with my sweetie. I'll see y'all at 6:30 for the price action recap. If you're gonna trade, trade safe. If you're not gonna trade, please take copious notes so you can implement what you learned today. I'll see y'all at 6:30. Gone.